Hi, Leonor here, and I want to show you how to calculate or complete problem 1-19 in your textbook. It's on page 52, and this problem incorporates all the concepts in the chapter. And once you can calculate this, it'll make it easier to complete your homework. So let's start. We have a Todrick company here, and this information is based on 1,000 units, and they're asking us for a contribution format income statement. Now, before we begin, we need to calculate the cost of goods sold. So let's go ahead and do that. So first we take our beginning inventory, we add purchases, and now we subtract the ending merchandise inventory. Once we sum that up, we now have the cost of goods sold. So again, we start with beginning, 20,000, we add purchases, 200,000, and then we subtract out the ending, which gives us 213,000. So now we're ready to begin. Sales, that amount is the same for both the traditional and the contribution margin. So we start with 300,000. Our cost of goods sold, we just calculated. Then we have our variable expenses, and we're given that number. So here we go, 15. But we're not given our variable administrative expense. It's okay, not time to panic. We do have our contribution margin though. So let's put that in. Now when we look at the information we have, we know that 300,000 of sales less the variable expenses will equal 60,000 in contribution margin. So in order to calculate that, we'll just reverse engineer it. We'll take the 300,000 and subtract out the 60. And we know that the total variable cost must be 240. Okay, so if we take the 240 and we subtract our cost of goods sold and we subtract our variable selling, boom, we know what our variable administrative expense is. It's $12,000. Let's do the same for our fixed expenses. So we have fixed selling, and that's, we're not given that number. And we have our fixed administrative expense. Again, not time to panic because we are given our net operating income. So I'm going to put that number in. And again, because accounting balances so wonderfully, contribution margin less total fixed expenses will equal the net operating income. So again, let's reverse engineer this. 60 less our net operating income. So the total fixed expenses must be 42,000. So what number plus 12,000 equals 42,000? Well, it's easier with Excel, as are most things. So there we go. Our fixed selling expenses are 30,000. So once again, contribution margin, sales, less all the variable expenses equals the contribution margin, less all the fixed expenses equals the net operating income. So that's how we do a contribution format income statement. Leonor out.